Today is November 6, 2023, and this is your Monday Market Update. Last week was quite a week, surprise to some and outright wrong to others. And to those who changed their stripes quickly, a great week to wrap up. So let's just do that. Let's wrap up last week and preview this week. Stocks gapped up on Monday, if for no other reason than the Friday sell-off was all about the worry about the war in Israel. Ultimately, the fear was that there would be a ground war escalation, and since that did not happen, all of the money that was risk off on Friday was back to risk on Monday. Eco data overseas supported disinflation, with German and Spanish CPI coming in below estimates. Solid earnings helped with the good earnings from McDonald's and Western Digital, offsetting the dismal earnings and outlooks from onsemi and SoFi. Rose-colored glasses were on. Most news, good or bad, was viewed and spun to be good. And when that happens, watch out. Same on the other side, but not Monday. Then the Treasury announced the amount of bonds that they would have to issue in the coming months. And as big as that number was, it was smaller than expected, so more risk on. Dow was up 1.5%, S&P up 1.25%, the NASDAQ was up about 1.25% also. Tuesday started somewhat muted, but still higher. Bank of Japan news was not as bad as feared. Okay, before I go on, recall that I have not used that term in a while, and also recall how much I hate that term. But it is what markets are seeing now, not as bad as feared. Added to the mix was some additional Eurozone eco data. The HICP, that's their CPI, came in a bit cooler than expected. Markets got into position for the Fed day on Wednesday, so no major move got any legs. The Dow closed up 1/3%, S&P up 2/3%, the NASDAQ up about 0.5%. Markets gapped higher at the open on Wednesday as bonds were back in the headlines, and rates, more specifically, yields went down as Treasury refunding came in as expected and not higher. Eco data was mixed. China and UK missed, and the US ISM manufacturing badly missed to the downside. Pile on the Goldilocks data from the U.S. labor market, with JOLTS and ADP jobs data supporting slightly cooling labor markets. While almost all we see still shows growth, soft landing is on everyone's lips. Markets once again did not get any serious direction into the Fed announcement. The announcement was as expected and with some small changes in wordings, but not much change to the outcome. Stocks jumped around. Powell's press conference did a great job of explaining to most watchers that they were done, while being more clear that they can and will raise rates if they need to. Recall the three pillars of the market that I've mentioned to you. In my opinion, the three things that this market needs to keep moving up are soft landing still being in play, disinflation still showing, and the Fed being almost done or done. By the end of the Fed day, also the Treasury refunding day, as some said, was more important. The Dow was up 2/3%, S&P up 1%, the NASDAQ was up just under 1%. Out of the gate on Thursday, we had markets gap higher again, more upside momentum, also some fundamental news to add. Earnings was a tailwind, and for the week, they were pretty good. Eco data in Europe, not as bad as feared. There it is, that term again. The big catalyst was the unit labor cost reported. It dropped 0.8% versus expected to be up 0.7%. Paid, that was a small uptick in jobless numbers, and the soft landing is still being talked about. Geopolitics gave everyone pause for a bit. When Russia said they'd send weapons to Hezbollah, no major pullback, not with the upward momentum. Most you can say is that it stilled the going up for a bit. 10-year yield was down again, and the FOMO trade had markets close near highs again. The Dow was up almost 1.75%, S&P up nearly 2%, the NASDAQ was up over 1.75%, and the stage was set for the jobs number. Friday was jobs day again, and the BLS said that there were 150,000 new jobs, less than forecast, but not so much. Also, the unemployment rate ticked up. The average hourly earnings was up less than expected. So think about those data points, all bad for the economy. So great news for the markets, great for the Fed. And what I'm telling you is that they have been trying to do, slow things down without pushing the growth off a cliff. Seems that as of last week, looking good or bad. So it is good. Got that? All three major averages opened higher. A lot of other noise. Regional banks having a great week. Fredhead Barkin does not want to prejudge the need for another hike. Got that? Everyone else is watching the markets are saying that they're done. He adds balance. Goldman agrees that they're done, but they don't listen to Barkin. Apple earnings from Thursday night held that stock down, so you can imagine how it would have been with Apple, an Apple tailwind also, not to be on this day. Markets all closed higher for the day. The Dow was up about 2/3%, S&P just under 1%, the NASDAQ up almost 1.5%. For the week, these numbers are worth slowing down for a moment. The Dow, the best since October of 22, up over 5%. S&P and NASDAQ with the best week since November of 22. S&P up over 5.75%. The NASDAQ was up 6 2/3%. On the back of all that, what does this week look like? As usual, on the eco front, following a jobs week, it's a bit slow. Consumer news are going to rule the day, both on the earnings side and also on the eco data. Consumer debt on Tuesday and consumer sentiment on Friday. A lot more earnings also, Uber, Disney, and much more. The Fed heads are back. I'm waiting for the trading cards, but ready for this? Cook, Barr, Schmid, Waller, Williams, Logan, Powell, Jefferson, Bostic, and Pace. We do have auto workers back on the job. Hollywood writers are back, but not the actors. So who will play out the next script here in the market? November and December are historically two of the strongest months of the year. Add in the year before a first-term president's reelection bid. But for anyone watching, if you think we can count on the usual happen, I'm not so sure. Okay, that's the week in review and preview and your Monday market update. We'll be watching as the week plays out. Not so much on the schedule, but rest assured this year will not go out quietly. I'm confident of that. So this is when I'll remind you, the signal, not the noise, in my opinion, is one of the keys to the long-term financial planning. Keep an eye on what goes on around you, but stay focused on your long-term goals and how we can work to achieve them. Come back on Friday for the planning video and stay in touch this week and always. Have a good week, and please keep the hostages in Gaza in your prayers.